Tichilo, you are the first governor to appear before this committee for the financial year 2024-2025. So I hope you're going to set the tone. You set the wrong one, and then the other 46 might also go wrong. You set the right one. We hope that others will also go right. We also take note that it's the first time you're considering financial statements prepared on accrual basis. For the last 10 years, counties have been reporting on a hybrid of cash and accrual. And so the financial statements might look slightly different. Before you came in, the reason why it took long for us to start this meeting, we should have started at 10, we were in conversation with the Public Sector Accounting Standards Board and the National Treasury on the differences between reports on accrual basis and reports on cash basis. Because if you don't do that, we'll start asking you cash basis questions. I think we are very clear in our minds right now that we'll be asking accrual basis questions. We are also very clear on the transition. We know what you expect to do in the first year, in the second year, and in the third year. We are also clear that there could be accounting issues as a result of that transition. And if they are purely accounting issues to do with compliance with the standards, we'll agree with the Auditor General to handhold you, and then we track them at the next cycle of implementation follow-up. Therefore, in as much as we have fairly long reports here, citing quite a number of issues on standards and preparation of financial statements, we want to focus more on lawfulness and effectiveness in the use of public resources. And if there are issues arising out of the transition from cash to accrual, we will get the advice of the Auditor General on how that can be worked on within the 60 days or 90-day implementation period. So, Auditor, could you tell us what the opinion was on the executive before we go to the basis of that opinion?
Thank you, Chair. Report of the Auditor General on County Executive for Vigiga for the year ended 30th June 2025. Report on financial statements was a qualified opinion.
So when it comes to the qualifying issues, what was the first basis for qualification? You may just read it and then we direct you.
One was failure to capitalize property, plant and equipment. Paragraph number 2, unsupported software license.
Let's just go procedurally. So number 1, what was the issue?
Failure to capitalize property, plant and equipment.
The substance?
The statement of financial performance statement reflects an amount of Kenya shillings 1,432,268,408 in respect of use of goods and services as disclosed in Note 8 to the financial statements. Included in the amount is expenditure of Kenya shillings 307,636,974 incurred on rehabilitation of civil works and an expenditure of Kenya shillings 303,085,635 incurred on constructions of civil works, or amounting to Kenya shillings 610,722,609. Review of records revealed that the 2 expenditure items were of capital nature and should have been capitalized in accordance with IPSAS 3 on transition to accrual basis of accounting. In the circumstances, the accuracy and fair presentation of the expenditure amounting to Kenya shillings 310,722,609 shillings and the use of goods and services could not be confirmed.
And what was the position of management, Governor?
Thank you, Chair. Chair, allow me to request my Chief Officer in charge of Finance to give a response.
Thank you, Chair. We respond as follows. The management acknowledges the auditor's observation on the above subject matter and responds as follows. During the preparation of the financial statements for the financial year 2024-2025 financial year, we relied heavily on the general guidelines on asset and liability management in the public sector from the National Treasury, that's the National Assets and Liability Management Directorate. In the guidelines, Part 4, 1E, provides that that's for accounting for non-financial assets, Section 112 gives guidance on capitalization of assets and threshold and it states, the capitalization threshold is the value above which assets are capitalized and reported in the financial statements as non-financial assets as opposed to being expensed in the year of acquisition. The capitalization threshold should not be applied to the components of an asset, but should be applied to the value of the capital asset as a whole. All other expenditures shall be recognized as an expense in the period in which it occurred. In particular, the expenses incurred in maintenance or reinstatement of an asset that ensures that the useful operating life of the asset is attained shall be considered as operating expenses and shall not be capitalized, irrespective of the quantum of the expenses concerned. Since we are in the first year of transition to accrual basis of accounting, and as per the IPSAS 33, that's the first time adoption, we are required to recognize the financial assets and liabilities, that is current assets and liabilities, as guided by the Treasury Circular number 3 of 2025, part 2.3, and also develop policies of recognition. The county has since developed Vigiga County Assets and Liabilities Management Policy and Procedure Manual, which will guide on the capitalization and other assets management areas like identifying and revaluing, classifying of assets for them to be reported in the financial statements in the last year of transition, which is financial year 2026-2027. We submit, Honorable Chair.
So in English, are you agreeing with the Auditor General or you are disagreeing with the Auditor General?
Honorable Chair, in our interpretation, going by
are you agreeing or disagreeing with this finding?
Initially,
that
we had disagreed.
What should have been capitalized?
Initially, we had disagreed, Chair, but upon engagements with the OAG, we have reached an agreement that this adjustment should be made as a prior year adjustment in preparation of the financial year 2025-2026, so that whatever was expensed is now capitalized under PPE.
Auditor General, 610 million is above 10% of the county's overall expenditure. Because you must be clear, ni pesa imepotea ama ni maneno ya bookkeeping?
This is an issue on bookkeeping. As we told them all the assets acquired during the financial year under review, they have the historical costs, they have the documentation, so they should be captured in PPE, not expensed.
So what's your recommendation?
Our recommendation is they are made the financial statement during subsequent year on capital items that has documentation and historical costs to be capitalized and not expensed.
So we should start seeing those adjustments in the quarterly reports?
Yes.
So this is a matter that we can leave for implementation follow-up?
Yes.
Okay, members, unless there is any query, it's 610 million, auditor amesema haijapotea. It's just that imewekwa kwa bedroom instead of sitting room. Isn't that just a classification issue? Yeah, we would give you a slap on the wrist because it's a first year of transition. Yeah. But I think after a period of time, Senate will not be lenient. It's just that this is the first time you're doing this kind of transition. So we keep that in view, and as we are taking a resolution to the House, it's something that we can track in the next implementation review cycle.
And Chair, Vigiga has developed County Assets and Liabilities Management Policy and Procedure Manual. It would not be the same county-wide. It will just be unique to Vigiga. And we are saying moving forward, maybe we should have a general one that is acceptable county-wide. But it's good for Vigiga for having developed this policy.